Hey everyone, welcome back to Corporate Decoder. Today, Mobile Infrastructure Corporation just filed their latest 8K report, and it is giving us a peek at their recent performance with a few key takeaways. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is reporting its second quarter results. And while some numbers are down, there are glimmers of improvement in specific areas. This is essentially a current report that companies file when important things happen that the public needs to know about right away. For Mobile Infrastructure Corporation, the big news here revolves around their financial results for the second fiscal quarter, which ended on the 30th of June 2026. So, what does this mean for the company's performance? They've released a press release detailing their second quarter results. While the press release itself isn't included in the text we can see here, the filing tells us it is about their financial condition and how they performed. This section is related to Regulation Fair Disclosure, which is a rule designed to prevent companies from selectively disclosing important information to certain investors. By putting this information out publicly and also making it available on their website, they are ensuring everyone gets the same information at the same time. This is a standard practice for reporting financial results. This is where they list all the documents that are part of this filing. The most important one here is Exhibit 99.1, which is the actual press release containing their financial results. Looking at the external context, we see recent headlines pointing to a Q2 loss for Mobile Infrastructure Corporation, with revenue also slipping. However, some reports also mention growth in same location net operating income, or NOI, and a reiteration of their 2026 guidance. This suggests that while overall revenue might be down, certain core operations are performing better. Now, let's talk about the company itself, Mobile Infrastructure Corporation. Trading under the ticker B.E.P is in the industrial sector, specifically focusing on infrastructure operations. They have a market cap of about $114 million. It is a relatively small company with only 18 employees, which can mean agility but also limited resources. When we look at the top institutional holders, No Street GPLP stands out with a significant stake of over 59%. This means that a large portion of the company's ownership is concentrated with one major investor. Other holders like Vanguard and BlackRock have smaller but still notable positions. Unfortunately, this filing does not contain detailed financial tables directly within the provided text. We only have the summary that a press release was issued. However, based on the news headlines and the nature of this filing, we can infer the general direction. The headlines clearly state a Q2 loss and slipping revenue, which is the primary story here. The mention of stronger parking NOI suggests their core operational business might be doing okay, but it is not enough to offset other challenges. This situation reminds me a bit of companies that have to manage revenue dips while trying to control costs. It's a tough balancing act when a company reports a loss. It raises questions about its ability to generate profits consistently. For a small company like Mobile Infrastructure Corporation with only 18 employees, every dollar counts. And a loss can put significant pressure on operations and future growth plans. The fact that they are reiterating their 2026 guidance despite the Q2 loss is something to watch. It could mean they believe the second quarter was an anomaly or that they expect strong performance in the second half of the year. However, it also could be a sign of optimism that might not materialize if the headwinds they are facing continue. A comparable situation to consider might be smaller companies in the infrastructure space that experience cyclical revenue patterns. They might see dips in certain quarters due to project timelines or seasonal factors, but their underlying asset value and operational efficiency can still be strong. However, in Mobile Infrastructure Corporation's case, the Q2 loss is a concrete negative data point that cannot be ignored. The risk I am watching is whether the company can turn its performance around in the second half of the year. If the losses continue, it could put pressure on their market capitalization and their ability to fund future operations. What I am actually looking for is more detail on the specific reasons for the revenue slip and how they plan to address it in upcoming quarters. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this breakdown helpful, give it a like and subscribe for more. Join our Discord for deeper discussions.